we wanted to really touch on this subject so you can be comfortable enough to bring up the conversation to your clients and new prospects. There's a lot of money to be made here for both the agent, of course, on commissions, and the client as well. So there's no reason why you as an agent, even if you focus on, smaller term cases or you're involved with final expense or mortgage protection, there's no reason to not bring up retirement planning and solutions, especially with you being a life insurance agent. There's a lot of very large cases here, and you're really doing the client justice by bringing up the topic. And of course, if you land one of these cases, they could be anywhere from $5,000 of annual premium to over $200,000. So it would really be a shame to not bring this up, because a lot of these policies are being sold, but just not with you. Okay, they're being sold by either a financial planner or maybe an agent that wasn't afraid to bring up the topic. So we really wanted to take today and get you comfortable with this idea and give you different solutions, software ideas that all surround retirement planning, so you can start to bring this up with your existing clients and, of course, new prospects. We're also going to give away a free 16-gigabyte tablet at the end of the call. Anthony's going to run for about 30 minutes. Me and Joe run for about 10 minutes. We're going to talk about different technology and tools that we have available through Levinson at no charge to you that basically gives you all of the marketing material, different brochures, flip charts, everything around advanced marketing or, of course, retirement planning. One other thing I want to add is Josh Hoffman, who is in our office. He's an internal here at Levinson. He is very experienced with either business-type insurance, retirement planning, any kind of advanced case design, any tax questions, anything that basically has to do with advanced case marketing or planning. Pick up the phone and call Josh. I mean, take advantage. Use him as a resource. We all do as marketers in our office, so we encourage our agents to pick up the phone, call Josh, get him involved. He'll get you everything you need to make the sale. So I encourage that. Okay, first off, we have our annual Agent Expo coming up in April of 24th, 2015. This is a day that you do not want to miss. Okay, we design the day and we build it around our agents, and our focus is sales ideas and concepts that you can take away with you and start using these new ideas that evening to make more sales. You're not going to hear 10 different companies talk about how great they are and how great their financials are. Okay, you're going to walk away with new ideas that you could start using in your everyday sales platform and marketing strategies. So very, very important. You do not want to miss this day. We also tie in a qualification incentive that starts at just $15,000 of paid premium, which gets you one free night at our beachfront location, and then, of course, $40,000 gets you round-trip airfare anywhere in the country, plus one free night. Another $10,000 gets you 2 free nights. You can bring the family down, make a little vacation out of it. We bring in breakfast, lunch. We have a keynote motivational speaker. It's really a day you do not want to miss, okay, especially trying to be a successful insurance agent. You want to maintain what you're doing now and only grow, okay? And these are the things that you need to do to keep building your platform. Very, very important. Okay, the best part is all life and annuity premium with Levinson counts towards these qualifications. Even if you don't qualify, this is free to all appointed Levinson agents. So jot that down, 4/24/2015. You do not want to miss. Very important. Okay, Joe is going to talk about our upcoming training webinars, which is what you're on right now. If you want to take out a pen and paper, and you do not want to miss these training webinars. And they're built just to basically keep you in the loop so you don't have to go surfing on 20 different company websites to know what's going on, what's the latest and greatest, what's discontinued, what new technology is available. So you don't want to miss these training webinars. And of course, if you have any questions at all, jot them down at the end of the call. Give us a call, email us. We will get whatever questions you have answered. We do have the line closed just because of the number of attendees that are joining us today. So Joe's going to talk about our upcoming training webinars, then we're going to dive into technology, and then we're going to roll right into today's presentation. Joe?
Thanks, Bill. Yeah, so we're actually on one of the training webinars today. So just like you would have registered from our homepage at kerrylevinson.com, you can actually go and register for any one of the upcoming training webinars that we have posted. A couple webinars I want to touch base on for next week. Of course, Monday, which is the 20th, at 2 p.m. Eastern, we have an overview of our e-policy delivery platform. Basically, that process, that system is going to save you about a week and a half to 2 weeks on your overall policy cycle time. So you can literally actually deliver your policy the same day it gets approved from the carrier. So we're not going to have to wait to mail the check to the carrier and wait for them to apply it to the case. If you use this e-delivery platform, your client's actually going to be covered about a week and a half to 2 weeks sooner, and of course you're going to get paid much faster than the traditional route. So if you're not using that system, I highly recommend jumping on that training. It's about 30 minutes long. Again, Monday at 2 p.m. Eastern. That same day at 3 p.m. Eastern, we have a training on a single premium whole life product that builds excellent cash value, has great liquidity, just a great option when it comes to looking at some sort of single premium product. So we're going to discuss all the advantages to that again at 3 p.m. Eastern. On Thursday, which is the 23rd, at 11 a.m. Eastern Time, we have an overview of the Phoenix Life Final Expense product, which is called the Remembrance Life. That has a lot of great riders, including a scholarship benefit that you can add on, an ongoing benefit for the beneficiaries. You could even split up the death benefit into an ongoing income stream to make that product more affordable. That is at 11 a.m. Eastern Time. That product also has a no-cost critical illness rider you can issue up to age 80. So that is a great final expense product. If you haven't looked into it, that training runs for about 40 to 45 minutes at 11. And then at 12, we have a webinar on college funding with life insurance. So we talk about the using of various life insurance product types to actually help set up and create a college funding plan. That's at noon. And again, you can visit the training calendar, which is on the right-hand side of our website, kerrylevinson.com. You can register for any one of those training sessions, and you can also check out the Levinson YouTube channel. You can actually access that right from our homepage, or if you go to YouTube, type in Levinson and then the number 1, you'll be able to access about 70 different training videos that we have posted. Those are available on demand as well.
Thank you, Joe. And keep in mind, all these things are available for all of our agents. So we have so much material and technology that's available at your fingertips. So it's just, most of it is on our website. We have kerrylevinson.com and insprofessional.com. We have different document libraries, marketing platforms, basically everything that you need, okay, as a life insurance agent to be successful, we have under one roof. And just probably 99% of everything won't cost you a penny. So if you're a little confused, if it's a lot of material, just ask us. Pick up the phone, call us, and we'll put you in the right direction and get you everything you need. This is our iGenius platform. So we developed this a few years ago. We were actually featured on MSNBC.com, and we were noted for the way that we are changing the way an insurance agent does business by utilizing today's technology. So this is an awesome program, but again, if you don't know where it is or how to get activated, it's going to do you absolutely no good. So I'm just going to name a few of the bullets, and of course, again, jot this down, and we can always revisit this at a later date or even later this afternoon. So as you know, we have weekly training webinars, which is what you're on right now. We just try to pick a new concept, a product, a new company, anything that's hot in the industry. And we try to wrap it up with a 45 to 50-minute webinar training. We have real-time online case status. What this means is you don't of course, we encourage agents to call our office, but you don't have to rely on someone in our office to tell you what's going on with your cases. You can log in our website anytime, see all of your cases, okay? Everything is updated in a real-time fashion, and then you can even email or message the case managers or underwriters. You can also look at all of your licensing, your E&O policy. You can also look at your downlines business. So, maybe you have a few agents that are under you and you want to see what kind of bonus you're getting. Everything is available through Broker Gear on our website. So you put your password in and you can see everything that we see here in-house. So that's very, very important. We don't keep you in the dark with anything. We have a very competitive carrier portfolio. There is not a company or product, okay, that is out in the industry today that is priced better or has more features or is better rated than what we have to offer our agents in the life, annuity, and long-term care world. And if there is a new company that rolls out, we're going to be the first to bring that to you. The next bullet there, our exclusive mortgage lead program is awesome. Okay, I promise you, the program has been out now for almost 3 years, and it works. We have a special fourth quarter sales blitz pricing going on right now till December 31st. This is a co-op system that we actually pay for part of the lead cost. Definitely take advantage of this. If you haven't tried it, today is definitely the time to take advantage of this. Give it a shot. If it's not for you, great. If it's for you, you can order every week, every single Monday. We place the orders. By the following business day, you receive all leads. We also have a final expense and annuity lead program that you can take advantage of. Every agent these days should have an online presence, okay? We give free agent websites. We have a built-in quote engine, different lead capture systems, all at no charge for our agents. We even have products that you can park on your website, Facebook page, social media, where you can drive traffic to these links, okay, or products. Your client clicks, they run a quote, the client signs up online, they get an instant approval, and they can either print their policy or the policy gets mailed directly to your client within 48 hours, all while you did nothing. We have lightning term, we have critical illness, we have different accident plans, we have probably 7 different products now that are completely client-driven with zero agent involvement. We even have social media packages. So basically, we get your Facebook page up and running for you, hand you the keys, and you're off to the races. We have different CRM programs that you can use from your cell phone or from your desktop, so you can send out different email campaigns every month, keeping your name in front of your clients, which is the name of the game here. It's very, very important. Everything these days is email marketing, as you know, because I'm sure you're getting hit by either your car dealership or if you go to the local movie theater. Everyone is sending out a monthly email now, and it's so important for you to keep your name in front of your prospects and clients, and we have all the technology to do that for you. We have a proprietary E&O plan. That's $400 a year for $1 million of coverage. That's about half of what a normal E&O policy costs. So again, take advantage of this stuff. Our annual Agent Expo starts at just $15,000 of paid premium to qualify for a free hotel, evening, and or round-trip airfare. Very, very important. Do not miss the annual Levinson Agent Expo. Awesome. We have a 24/7 automated underwriting platform called X-Ray. This allows you to put in as little or as much information that you have about a particular client. The system will tell you instantly what carrier, what health class, and what the premium looks like, so you know exactly where to go, which e-application to pull up, and you can quote effectively even on a Sunday afternoon when we're not here. Most important, family-owned and operated since 1972. We have 15-plus life, annuity, and long-term care experts at your fingertips until 7 p.m. Eastern Time, Monday through Friday. Okay, we don't close our door at 5 o'clock or at 12 o'clock on Fridays. We don't have summer hours. We're here to help you. Okay, let's move forward here, and we're going to roll into the presentation. Joe?
Yeah, thanks, Bill. So, we talked briefly in the beginning about how important it is to focus on helping clients with the retirement that they're going to be facing. And, I won't go through too many boring statistics, but obviously everybody here is on the call. It wants to learn more about this opportunity and kind of help grow your business. So I'll just focus on one quick thing, and then I'm going to actually show you two complementary tools that we actually have set up for agents you can start using today to not only generate more leads specifically for clients that you can help with retirement planning, and then also the second tool I'll focus on is going to help you once you're in front of that client. It'll help you actually make the sale and kind of set yourself apart from other agents. So one quick statistic I want to go over, I'm sure we're all familiar, over the next 20 years, more than 10,000 baby boomers will be retiring every single day. And what's most important about this statistic is over the next 5 years, the health and medical insurance industry's revenue is forecasted to increase on an average annual rate of 5% to just under $866 billion. So forgetting about all the other expenses and costs that boomers are faced with, these increased medical costs are really going to put a stress on all their underfunded retirement nest eggs, and the average American really has an underperforming asset class. When you look at the average client, they're faced with a lot of things that are going to be difficult. They're not sure how they're going to retire, how they're going to actually bridge that gap. So today's webinar is really focused on how to provide them with that solution and how to help you as an agent get in front of more clients. The first tool I want to talk about really focuses on generating opportunities for retirement planning. We've partnered with an industry-leading email marketing firm to actually bring you a complementary tool that allows you to stay in touch with your clients, create custom marketing pieces designed for any specific type of market segment, and also build a list, target those people, pick from any one of the templates that are available. I actually took some screenshots of the available templates on the bottom here so you can see what's available. You can actually market those to existing clients, prospects, maybe people that are just interested in this demographic that are going to have a need for actually helping them set up their retirement plan. So you can actually view the results. What I mean by that is you can send out, let's say, one of these templates to a listing of your prospects or maybe previous clients and actually see who opened that email. So now you have some actual clients that are interested in this topic that you can then pick up the phone, reach out to them and say, hey, this is your agent. I see you opened my email. What do you think about that concept? When can we actually set up a time to meet and go over how these products work, and I can show you what's available to you to actually help with your retirement planning. The second tool I want to talk about is actually a complementary sales tool that's part of our iGenius platform. It's called InsMark. This is a software that normally costs about $800 if you were to go directly to the source. By working with our office, you get this software 100% no cost. This is a system that actually integrates with the carrier software, so you can run an illustration. You can then hit the InsMark button. All that data that's inside of that illustration then gets put into the InsMark system. I've taken a quick screenshot of one of the reports inside of InsMark. There's probably about, I would say, 150 to 175 different customizable reports you can show to that client that help you as an agent make the sale. So they really package any type of life insurance product that you're looking to sell into a easy presentation, a very easy to understand scenario that your client can take a look at. As you can see, there's great charts, there's graphs. This really makes the whole selling process very automated, very easy. So this, again, is absolutely free. We can actually send out the software to anybody that's interested at the end of today's call. But I will stress, if you haven't checked this system out, spend at least 10 or 15 minutes because it'll help you in your sales presentation. It'll help that client visualize what's going to happen if they don't do anything and they leave all their assets as is, or if they put a plan together. And specifically, what we're going to be talking about today is what type of plans they're going to actually be using to help provide that need and help fill that gap, especially when it comes to retirement planning.
Okay, thank you, Joe. So as you're aware, North American is one of our primary companies, and they're really our go-to carrier for indexed universal life, indexed annuities. They have excellent, excellent products that fit perfect with this whole retirement planning concept. So we are delighted to feature our guest speaker today, and he basically is going to come on and talk about retirement planning 101, make a complex side of the industry very simple to understand. So without further ado, I want to introduce Anthony Holland, our Sales Development Specialist from North American Life. Anthony?
Perfect. Thank you very much, Bill, and thanks, Joe, for all that great information to start today's session. I haven't had an opportunity to work too closely with Levinson and Associates in the past, but I just know from listening to all the great information that they've provided and the support that they provide that everybody on this call is very fortunate to have an agency like Levinson and Associates in their corner. So today's session, we are going to talk about retirement planning using Index Universal Life Insurance. And as Bill mentioned, this is a concept that it's not new to the industry. It's well known for a lot of carriers that have an IUL portfolio, and it's one of our top sales concepts that we see illustrated on a day-to-day basis. But it is it's a concept that has a lot of great information, and the possibility for sales is endless with this particular concept. So before I start getting into the information too much detail, I want to make a couple really quick suggestions. Both Bill and Joe during their open suggested jotting a couple things down that they had on the screen. And I'm going to actually suggest keeping that piece of paper out and handy to take notes during this presentation. Jot down some bullet points that really jumped out at you, or things that you want a little bit more information on, and get in contact with the fine folks at Levinson and Associates. Also, as we're going through this, we're going to go through some case studies. We're going to give you some information on client criteria or client objectives or just things to look for with your clientele. Think of your current clientele. Think of your current book of business to see if you have any existing clients that fall into this sales concept. And if you do, jot down 3 of them and don't wait to give them a call. Put this to work for you, beginning the middle of next week, and see if you can set your first 1 to 3 retirement planning conversations in the next 7 to 10 days. So those are my 2 suggestions. And we're going to go ahead, and as soon as I get rid of this error message, we're going to dive right into our information. And before I get to our agenda, I have to allow our compliance department to say a quick little greetings. I won't spend a lot of time on these disclosures other than to tell you that these disclosures do apply to this presentation in its entirety. When we talk about IUL, we talk about a lot of great information, a lot of non-guaranteed assumed rate or performance. So because of that, there are a couple different pages of disclosures. So again, these disclosures also apply to the presentation in its entirety. So what is retirement planning using life insurance? Well, very simply put, retirement planning with life insurance is life insurance protection during the working years. And on the back end, you're going to have some potential cash value accumulation to supplement retirement income in the retirement years. Using life insurance can enhance the client's traditional life insurance plan. And one thing to always remember is this shouldn't be positioned as the primary source of retirement income. This is, again, a supplement to the primary retirement vehicle. There are a couple situations where they may not have a primary retirement vehicle available to them, or in the case of business owners, they can put something like this in place on themselves and not have to worry about offering it to their employees. But for the most part, this is going to be positioned as a supplement to what they already have in place. Our suggestion when it comes to retirement planning using life insurance is to incorporate Index Universal Life to help supplement that retirement income. And today I'd like to talk to you about how and why to use North American's IUL portfolio to make your next retirement sale. So here's our agenda. We're going to start by kicking things off and discussing why life insurance, how it works, client objectives, and how the concept can help benefit your clients. Secondly, we're going to look at why North American Company. We're going to get into some features. We're going to talk about our available product portfolio that fits really well into this concept, and why you should consider North American when writing your next retirement planning case. And then finally, we're going to bring it home with some positioning and some presentation. We're going to go into a couple of sample cases, quick sample cases, to show you the power of an IUL and how it can supplement retirement income on the back end, some design tips and features, and we're going to get into some other positioning and some other very marketable talking points that come with our IUL portfolio. So to start off, we need to know why life insurance fits with this particular concept. And to fully understand retirement planning, we need to start there. The cornerstone of the sale is the death benefit. The first step in any life insurance sale is to properly ensure that the client's death benefit needs are met. And when you're using an index universal life product with North American, the policy is going to provide a couple different things. It's going to provide the client with death benefit protection during the working years and potential accumulation on the back end to help supplement that retirement income. And that's a phrase you might hear from me a couple different times. It's death benefit protection during the working years and potential cash value growth on the back end. And so during the client's working years, that death benefit protection can help cover them in the event of a lost income due to an untimely or premature death. Plus, that death benefit is going to pass on to those beneficiaries, and that's generally going to pass on tax-free to those heirs. So a very, very marketable and positive talking point. During the client's retirement, the death benefit provides security to the beneficiaries. The legacy building conversation can take place at that point in time, all while providing the client with additional funds that they can access to help supplement their retirement income. Keep in mind the death benefit can be left behind, as I mentioned, for that legacy, for the purposes of legacy building. So a really nice thing to remember when you're talking to these clients is even though that cash value is there to access and supplement their retirement income, if they don't outlive their primary retirement vehicles, that death benefit's still going to be there to pass on, generally tax-free. Using life insurance for this particular concept can help with two unknowns. It's going to help with the loss of income due to an untimely death, and it's also going to help prevent a client from outliving their assets during retirement. As we just talked about, using life insurance and how it can help provide death benefit protection during those working years and potential cash value into retirement. But now let's look at some of the other key benefits that a client can look at or can focus on when they're using index universal life insurance for the retirement planning concept. They're going to have immediate death benefit protection. You think of a scenario where a client is putting funds into a retirement vehicle, whether it's a money market account, an annuity, 401k, anything. Right off the bat, it's going to start with a low amount. It's going to need to gradually accumulate before it gets to an amount that, one, is going to provide them any type of protection during their working years, and two, is going to provide them with any type of legacy if they were to pass away with an untimely death. With a life insurance policy, that death benefit starts immediately. They're going to get immediate death benefit protection to supplement, or to replace lost income or leave that legacy on the back end. Secondly, there's no funding limitations. They're not going to be limited on how much they can put into this policy. Now, keep in mind that they're going to be limited based on the size of their death benefit, or the size of their death benefit will limit the amount that they could put into a policy. But it's really up to them how they want to structure the funding using a life insurance policy, and we can adjust the face amount accordingly. If the client wants to put in more funds up front, maybe tailor it down a little bit on the back end, or vice versa. So we can adjust that face amount to allow for any type of funding scenario, and they're not going to have any limitations on funding. With a life insurance policy, you're going to see tax-deferred growth. That cash value is going to grow on tax-deferred, so they can access it on the back end. They're going to have more to access on the back end. Depending upon how we set up accessing the cash value and how you set up the policy to begin with, they're going to have potentially tax-free income on the back end to supplement their retirement. If they never need to get at the funds of their IUL, they're not going to see any penalties. They're not going to have, they're not going to be forced to take anything. If they need to take some of the cash value out of their IUL and they take it prior to a specific age, they're not going to have any penalties for early access. They're not going to have any penalties, for taxation if we set it up appropriately. And then finally, no required minimum distributions. As I mentioned just a few minutes ago, in some cases, a client may set up an IUL for supplementing their primary source of retirement income, and they may never outlive or outspend, if you will, their retirement or their primary source of retirement income. And if that's the case, they're not going to be forced to pull money out of their IUL. They can leave that full amount, let the cash value continue to grow, potentially forcing or pushing that death benefit even higher to leave a larger legacy, potentially tax-free, to their beneficiaries. A couple other things to consider. When you're dealing with a life insurance policy to supplement retirement, it's very, very important that you make sure that the death benefit needs are met. There's a couple of different ways to set up a life insurance policy in the retirement planning concept. One of the more common ways is to create a minimum face amount to maximize growth potential. And that's great. There's a lot of different illustrations that we put together on a day-to-day basis that illustrate that point, but you really need to make sure that you're doing your due diligence, going through the appropriate financial documentation or financial questionnaire to determine how much life insurance they actually need. Because again, the primary cornerstone, or the cornerstone of this concept, is that death benefit. So while we're trying to accumulate the most cash value on the back end, we don't want to disregard the need for life insurance up front. So have the appropriate conversation to make sure that you are providing them with a death benefit that's going to meet their needs. When you're dealing with IULs, the growth within the policy is based on non-guaranteed performance. They're tied to index performance. In our illustration software, our illustrations are going to show a couple different columns. The growth within an IUL is tied to non-guaranteed performance. So it is something to consider when you're running those illustrations. Our illustration software will default depending upon or actually not depending upon, but whatever index selection the agent and the client chooses, our illustration software is going to default to the 30-year look-back percentage for that index. Some agents and some clients want to dial that back to be a little bit more conservative, and that's fine. It's just always important to remember that if you leave that at the 8.2 or whatever it's defaulting to, that is a non-guaranteed number, and the performance within the policy is going to be based on that non-guaranteed number. Another thing to consider is there are charges that are going to be associated with the life insurance policy. Obviously, death benefit is being provided from day one. So there's going to be costs of insurance charges that are applied. There's going to be some other expenses that are built into the policies that you're not going to find in traditional financial vehicles. So just keep in mind, keep your clients aware that these deductions, these cost of insurance deductions, policy expenses, may reduce the cash value of the policy. A few more considerations. Consider the amount of death benefit to start off with, and this is actually twofold. The first bullet on the last slide, you may think it's the same type of conversation, but there's a little bit of a different twist on this, and actually the first and third bullet on this slide kind of fall into the same category. The amount of death benefit protection, where we may be solving for a minimum face amount, and if we do that, that's going to limit the amount of a premium that they can put in on a monthly or annual basis. And think of other clients that you may work with or your own primary source of retirement income. How many people do you visit with on a day-to-day basis are putting the same amount into their retirement plan now as they did 10, 15, 20 years ago? Or on the flip side of that, how many people, if they're early into their retirement planning, how many people are saying to you that they're going to keep this number, the number they're paying now, as a fixed number and not plan on increasing premium payments or increasing contributions later on? So if we solve for a minimum face amount, we're going to be limiting the amount of growth that they can actually fund this policy with. So if we're solving for a minimum face amount, you may want to ask them, what is the likelihood that you're going to want to increase your premium payment? If they say it's a strong likelihood, increase that face amount. Build in a little bit of a cushion, a little bit of additional room for them to put more funding in as they have more disposable income as they advance in their career. And that's, again, the third bullet. Expect changes in the premium. That's just building in that flexibility for increasing that premium. And then finally, or the middle bullet here that I kind of jumped over, is look at a specified amount of coverage. A client may come to you with this retirement planning concept and say that they're looking to just get some sort of supplemental plan in place. Solving for a minimum face amount, again, may limit them on what they can fund. They also may not have they may have a desire or a need for more death benefit. So rather than solving for the minimum, specify a little bit larger amount. That's going to, again, allow that premium flexibility, and it could potentially provide them with the death benefit protection that they actually need to cover, their income if something were to happen, while they were still in their working years. Few more considerations on why life insurance is a great option. I mentioned earlier that you don't want to necessarily always solve for the minimum face amount, but in the event that a client has, a custom guarantee policy or a guarantee builder with North American where they have an adequate amount of life insurance coverage, consider using an increasing death benefit option. What an increasing death benefit option does is it allows for a much smaller starting face amount, and it allows for more premium to be put in, but with that smaller face amount comes a smaller cost of insurance charge. You're going to minimize the cost of insurance within the policy and maximize the growth potential. So it's a great thing to consider if, again, they have the adequate coverage in place already. Another thing to remember is avoid modified endowment contracts whenever possible. One of the main talking points with retirement planning using an IUL is that those tax-free loans on the back end to supplement retirement income. If we have created a modified endowment contract with the policy, now we're going to put in some taxable implications on those funds when they start to access that growth when they're in the retirement, if they choose to access that growth. So avoid modified endowment contract status when you're setting up these illustrations. And finally, on considerations in why life insurance is, you may run across a scenario where a client has a lump sum that they want to transfer into a policy. Maybe they've come across an annuity that they're not going to use, or a recent windfall or inheritance, and they just want to put this into some sort of vehicle that's going to cover a lot of different areas for them, both from a death benefit protection standpoint and a cash value standpoint. We can take that lump sum. If we were to try to take that lump sum and put it into a life insurance policy, we would have to create, depending upon the size of that lump sum, a death benefit that's so large, a couple different things are going to happen. The expenses and the cost of insurance charges are going to deplete the cash value, causing the policy to lapse much sooner than the client would want to. Or if we try to minimize the face amount to create longevity in the policy, we're going to end up creating a modified endowment contract. So something to consider is using a North American SPIA, or single premium immediate annuity. We can take that SPIA, take that lump sum, put it into the SPIA, and set up a known number of years that the client wants that SPIA to pay into the life insurance policy. And that's done automatically here at North American. So they can determine, I want all these funds to be in there in 5 years, 10 years, 15 years, whatever duration they want to set up. And then that SPIA will automatically pay that premium on an annual basis, so a client can avoid late premiums, missed premiums. They can know that systematically their IUL is going to be funded to help supplement their retirement income. So we've covered why life insurance. Let's dive into why North American company. So we're going to get into just a couple features on what sets us apart from a cash value standpoint when dealing with clients in retirement, the retirement planning concept. First of all is something that is unique to North America. That's daily index sweeps. To my knowledge, it's unique to North America. What that means is, as a client pays a premium, if we receive the premium on the trading day, those premiums are going to be allocated to the index the client has selected on that trading day on a daily basis. Some of our competitors are going to they're going to have sweeps every 2 weeks, every month, every 6 months in some cases. Imagine a client that pays a premium into a policy that has a sweep date every 6 months. They pay a premium after that sweep date. Now that premium sits in a minimum interest fixed account for the next 5+ months until that next sweep date rolls around, when finally that premium is put to work with the index selection that the client chooses. With North American, they don't have to worry about those funds sitting in that minimum interest rate fixed account, because we're going to sweep on a daily basis as long as it's a trading day where things are open for business. Another thing to consider is the interest on a North American IUL is credited based on the beginning of the year segment values. And what that means is that we don't take out our costs of insurance charges or other expenses and then credit interest rate. We actually credit the interest rate at the beginning of the year values, and then we take out the expenses and the charges. To give you a really quick example, imagine a scenario where a policy had credited interest they had $1,000 in charges being taken out. With North American, if the cash value of the policy at the beginning of the year is $10,000, and our competitor has the same cash value at the beginning of the year, $10,000, our competitor is going to pull that $1,000 out before they credit interest rates. So they're actually going to be crediting the interest rate based on $9,000, where North American is going to credit the interest rate on the full $10,000 and then pull the costs out. And on the small amount of $10,000, that may not seem like it's going to make a big difference, but you think of larger account values, larger beginning of year account values, and multiply that and compound that year over year over year. That's going to end up being a lot of potential value that's lost in that policy when they pull the COIs and other expenses and then credit the interest rate. So with North American, again, interest rate is credited on the beginning of the year segment values. And a lot of these things, folks, are reasons and features that make North American such a compelling option for the retirement planning concept. Next, we have a fixed account option. We have a number of fantastic index options. We have a fixed account option for the client that wants to be a little bit more conservative with their life insurance policy. Nice thing about North American is we do not force or require funds to go into that fixed account. So they can allocate 100% of their premiums to an index account and be aggressive and be a little more aggressive with their IUL. If they want the fixed account option, it's definitely there for them to take advantage of. North American has a capped variable rate loan of 6%. So a client who takes out a variable interest rate loan out of a North American policy is always going to get the current variable rate. Right now, I think the current rate is right around 4%. It's tied to the Moody's corporate bond yield. But they can rest assured knowing that that rate that their loan is going to be charged is never going to be higher than 6%. We cap it off at 6. A nice thing about how we use our illustration software is we will not allow an illustration to be put together showing a variable rate loan percentage of less than what the 30-year look back for the Moody's corporate bond yield is showing. So the current 30-year look back for the Moody's corporate bond yield is 5.8%. So our illustration software will not allow an agent or a client to want to see an illustration on a variable rate loan percentage of less than 5.8. Even though they're always going to get the current, they can't illustrate 4%. 4% is a non-guaranteed rate. But knowing that the IUL illustrations with North American are illustrating 5.8, and the worst that they can do is 6%, is a very conservative approach to that illustration, and it can give a client and an agent a lot of a peace of mind knowing that that variable interest rate loan percentage isn't going to go up much from what we're illustrating. Two features that the IULs with North American have that were put on here and designed for accessing cash value. First is the overloan protection benefit, very common in the industry. Overloan protection benefit allows the client to access cash value out of the policy until they reach a red line minimum face amount just before the policy is going to lapse. The loans are cut off, and now they walk away with a paid-up minimum face amount life insurance policy. Fantastic. It's a great feature that prevents a client from, again, over-loaning out of a policy, causing it to lapse, creating a taxable event. But they may walk away with a policy that's much, much smaller than they actually needed. So that's where North American put the protected death benefit feature in place. And again, this is something that is unique to North American to my knowledge. The protected death benefit feature essentially is an overloan protection benefit, but it allows the client to specify where they want that red line face amount to be. So think of a scenario where a client has a $750,000 builder. They're going to start accessing the funds out of their contract, but they know that they want to maintain at least $250,000 of coverage. They call our client communications department, say that they want to put the protected death benefit feature in place, and they want to protect $250,000. We will take enough cash value out of the policy to pay up $250,000 of coverage. Those funds are not available for distributable funds, can't access them with loans or withdrawals. The remaining cash value within the policy is accessible for distributable funds. If they ever get to a point where they've completely depleted their distributable funds, they walk away with a paid-up death benefit of whatever they chose to protect. And my example was $250,000. Those two features, again, are automatically included on our IULs. There's no form that needs to be selected. There's no rider that needs to be added. They're automatically included. A couple other things here. We have a contractually guaranteed interest rate bonus of 0.75% on our Builder IUL. Our other IULs have contractually guaranteed index bonuses on the index accounts also. When we talk about retirement planning, we typically focus on the Builder. So that's what I'm doing now. The Builder, contractually guaranteed 0.75% interest rate bonus, and that's applied after caps and after floors. So with an index selection where the cap is 13%, starting in the 11th policy year, the cap essentially becomes 13.75%. So a great feature, and I can't stress it enough, folks, contractually guaranteed. So you can, if they're actually in the illustration, it's factored in that will be there because it will be there for the client. We have a 3% minimum return. On an annual basis with an index policy, and with the index policy with North American, the floor is 0. We have a 0% floor. But what North American does is every 8 years, we look at the performance of the policy and compare the actual performance to what the policy would have looked like if the client would have allocated 100% of their premiums to the minimum interest fixed account of 3%. If the 3% hypothetical illustration is larger than the actual performance of the policy, they're going to have the 3% hypothetical number put into their fixed account and then can distribute that and allocate that to different index selections that they choose. So it's a great feature just to know that every 8 years, we're going to look at the performance of the policy and make sure that they're at least getting 3% growth on their money. So a great option there. And then finally, on why North American, accelerated benefits. And the accelerated benefits portion of this presentation, I could go on for hours on the accelerated benefits that we have on our IUL. But for the purposes of time, I'm just going to let you know that our IUL, our Builder, and our Guarantee Builder, depending upon the state you're writing in and depending upon the age of the client and rate class, our Builder IUL has the chronic illness accelerated benefit, has a terminal illness accelerated benefit, and also has a critical illness accelerated benefit. Our Guarantee Builder also has those three. Our Rapid Builder has chronic and terminal. So we have great accelerated benefits for those blindside moments that may come up where a client needs to access some of their death benefit to help supplement or help pay for some expenses that can come from a chronic, terminal, or critical illness. So great benefit. We have all kinds of marketing material on those accelerated benefits if you'd like to have some more information. A few more things on why North American. And now we're going to talk about more tailoring the plan. Okay, we talked about increasing benefits, and we also talked about, I'm going to talk a little bit about level benefit. A level benefit is going to provide a larger face amount. It's going to provide a larger initial face amount. It's going to be a little bit more, limited on funding options and how much they can fund. But it's, again, going to provide a larger face amount. For those clients that are looking to put a policy in place that needs some coverage, a level benefit is a great option. For the increasing benefit client, it's going to start with a lower face amount, lower cost of insurance. It's going to give them better growth potential, and it's going to allow them to put a little bit more money in up front. All of our IUL products are filed with as a guideline premium or a cash value accumulation test. The guideline premium test is designed for better long-term performance. The cash value accumulation test is designed for more immediate, short-term, kind of a boom performance, if you will, within the policy. 99 times out of 100, I'm running the guideline premium test for various reasons. Cash value accumulation test, there's some uncertainty with the cash value accumulation test and what is or is not considered a material change, creating a MEC. I could go on again on that for a long period of time. But just know that there are a couple different options for running the illustrations. Guideline premium with an increasing benefit is going to do a lot of the same things that cash value accumulation can do. The cash value accumulation test does give a little bit more premium flexibility. It doesn't have the same types of guidelines that the GPT test does. But again, I tend to avoid the CVAT test if at all possible, unless I'm running another concept that we use CVAT a lot in. North American has actually three different loan types that are available. We have our standard loans that are available right off the bat, second policy year. And then we have our variable loan that starts in the sixth policy year. Our standard loan will actually turn into a wash loan starting in the sixth policy year also. And a client can switch from one loan type to another without a cash payoff. So imagine a scenario where you have a client that they start taking funds out of their IUL, and we're at our capped variable loan rate. The index isn't really performing that great, so they take a wash loan. 10 years into their loans, they look at the variable interest rate loan percentages come down. Interest rates are better. The index that they're allocating to is performing. They can switch from a standard loan to a wash loan without paying off all their existing loans that are already out of the contract. The only thing they have to do is switch all existing loans to the same type. They can't have 10 years of standard loans and then 10 years of wash loans. They just have to switch all their loans to the same type. They can do this as many times as they need to. They're not limited to making loan changes. They're only 3 times in the life of the contract. They can adjust accordingly depending upon how things are going for their policy. And then finally, the last thing to consider is maintenance on the policy. IUL, as I mentioned, there's non-guaranteed performance. So you want to make sure that you're meeting with your clients on an annual basis to go over the actual performance of their contract. You want to make sure that the initial conversation you're having with your client discuss the different columns on our illustration. The non-guaranteed column is based on a non-guaranteed assume rate. The non-guaranteed alternate is based on a smaller assumed rate with current COIs. And then the guaranteed column is worst case cost of insurance and worst case interest rate assumption. So make sure you're discussing all 3 columns with your clients and how the non-guaranteed performance can impact or could potentially impact both in I guess if you want to say in a negative way or in a positive way when you're dealing with IULs. All right, finally, folks, we're going to get into probably what a lot of you came here to talk about, and that's positioning and presenting this. The first thing, we're going to talk target market. And really quickly on the target market, you're looking for clients that need life insurance protection. Again, that's the cornerstone. Some sort of need. You may have clients, as I mentioned earlier, that have ample amounts of coverage, but they still have a small need for a little additional coverage. An increasing benefit on a builder IUL is a fantastic option for those clients. Clients that are planning for retirement, 45 or 35 to 55 is kind of that age range. It doesn't have to be in that, but that's typically what we're looking for from an age range standpoint when you really start planning for retirement and looking into the future. Clients that either are maxing out their qualified plans or they don't have access to a qualified plan. As I mentioned right off the bat, the retirement supplement concept is not designed to be the primary source of retirement income if possible. I mean, you're going to have clients that don't have access to qualified plans, and then retirement planning and using an IUL is a fantastic conversation to have, but it really resonates and hits home for those clients that are maxing out their qualified plans already, and they have additional distributable funds that they want to put somewhere else to continue to build value for their retirement planning. Those types of clients are what you're looking for. And clients that are potentially concerned about market loss. As we always talk about with IUL, the great upside with IUL is there's upside growth potential and there's protection from downside risk. There's protection from downturns in the market because the money isn't directly tied to the market. We're just using index options to determine interest rates that we're crediting. So we have the zero floor on an annual basis. So the client that's concerned about market losses and are looking for something that can provide them with a little protection from downturns, the IUL is a great option to look at. So let's jump into a case study really fast. We have a 45-year-old male. This is Alan. Alan's 45. He's preferred non-tobacco. He's in great health. He needs life insurance protection, and he has $20,000 of disposable income for 20 years. I envy Alan on that last bullet. So Alan he's looking for some additional retirement income or potential retirement income on the back end to supplement what he already has in place. So look at Alan's case study here. What we did here is we set up Alan paying $20,000 a year for 20 years. And we solved for a nice face amount that's actually grown, or actually, excuse me, it's just over $1 million, $1.08 million on that face amount. We dialed down the assumed rate to, and actually, we dialed down the assumed rate to 7.5%. Okay, and we set our variable interest rate loan percentage as the default of 5.8. So this is a variable interest rate loan option. You take a look at Alan's illustration here. After 20 years of putting in $20,000, based on a 7.5% assumed rate, which you can make the argument looking at the historical performance of a lot of our index options, you can make the argument that 7.5% is a very conservative rate. You look at starting in the 21st policy year, Alan is pulling out, is able to pull out based on the 7.5%, just under $83,000 tax-free. That right there is a supplement, or that's retirement income in and of itself. Now, if this was designed and this was set up as the supplement to his retirement income, to something he already has, Alan's living a pretty nice retirement when you start factoring in the growth of this IUL using the variable interest rate loan. And these loans, we're talking 20, 25 years into the future, this is what we're calculating here. And that number, can't stress it enough, is based on that non-guaranteed of 7.5%. That's a fantastic illustration to show Alan a client who's looking to supplement retirement income. If you wanted to be a little bit more conservative with your loan option, we're talking now and looking at an option, same client, same face amount, same funding. Instead of the variable loan, we're looking at a net cost zero loan or a wash loan. So a wash loan, we're crediting 3%, we're charging 3%. So we look here, based on that wash loan, over $56,000 of tax-free income coming out of this policy with the wash loan option. Now keep in mind, after 5 years, if that index and the variable loan rate have come down, Alan can make that switch to that variable loan option and see a little bit more coming out of this policy to supplement retirement income. So a great option still is this net cost zero loan. And now let's look at another option where we're looking at a death benefit illustration. So now we know that Alan has a specific dollar amount in mind that he wants to supplement with his retirement income. So he wants $65,000 coming out starting at age 66 years old. So that's the amount. He gave us the dollar amount. Now we can actually find the fixed amount he wants. He needs a specific amount of coverage, $1.24 million. Now we can find, based on the 7.5% assumed rate, what he would have to fund his policy with to obtain both the $65,000 of income based on that 7.5% and the face amount of $1.24 million. So here we can tailor an illustration to show Alan exactly what he's looking for. $65,000 tax-free, just under 30 grand a year for 15 years is going to provide him that income. So another different illustration option that you can go to for a retirement planning case. Wrapping it up here, folks, a couple more things on positioning and presenting. North American on our software, if you've downloaded our software, something that's available to any agent contracted with North American is the INSMARC supplemental presentation tool. INSMARC is a fantastic option to sit down with a client and show them and compare the growth of the IUL with North American and compare it to different financial vehicles that they may come across. And this is a snapshot of an INSMARC presentation comparing the builder IUL at 7.5%, 30% tax bracket, and comparing that to a tax-deductible retirement plan with the same yield of 7.5%. And what this is going to show you is how the growth of the builder is we're going to be able to maintain a larger or a longer time frame for those loans while still providing a tax-free, generally tax-free benefit to those heirs. So I encourage you, if you haven't looked at INSMARC, I encourage you to do so. It's a great supplemental sales tool. Another thing that we have available are presentation material. We have sales kits for retirement planning that are going to take you from the initial conversation all the way to the back end of the conversation. We have case studies, we have checklists, marketing material, both consumer and agent. A great tool available to you to access to really familiarize yourself with the retirement planning concept. So let's sum up really quickly here. I apologize, I've taken a little bit more time than I had anticipated. So why North American? Or excuse me, why life insurance? It's planning for the present and the future. We're talking death benefit protection for the working years and potential cash value growth for into the future, into retirement, and then beyond, potentially in scenarios where a client outlives their primary source of retirement, they're always going to have that cash value potential with the IULs. So why North American? We have products that are tailored to growth potential, tailored to this concept. We're talking about different loan options. We're talking protection benefits, living benefits, guaranteed interest rate bonuses, a number of different things that make the IULs with North American a primary go-to product for the retirement supplement concept. And then finally, positioning and presenting, talking about running different illustrations showing a little bit conservative interest rates, sales tools that are available, a number of different things to help you make the retirement planning sale. The bottom line is the client's going to get options. The client's going to get death benefit protection during the working years, potential cash value to supplement retirement income, and that death benefit is always going to be there if they don't access that cash value to create that legacy and to leave to their beneficiaries. As an agent, you get a retirement planning solution, a fantastic and competitive retirement planning solution, and you're going to get the support with the materials that we have for this concept. And then you also, you heard the rundown of all of the things that the fine folks at Levinson Associates provide. You get the support to help grow your business with this concept. As I mentioned, next steps, hopefully you wrote down some clients. Give them a call by the middle of next week and discuss with them how a North American IUL can help supplement their retirement income. Bill, Joe, I'm going to turn it back to you. I apologize for going a little bit longer than I thought. I get a little long-winded when we start talking about these great concepts.
No, that's okay. We had a lot of information there in a very short time, and you did a great job. So thank you for that. Okay, so I want to thank all of our agents for taking the time today. We are going to send out an email after the call with all of the brochures, marketing material, basically everything that we spoke about. And don't be afraid. Just pick up the phone, call us. We can even get Anthony involved if we need to. So you make the first step. We'll take it from there. And again, thank you so much. The 100th registrant for today's webinar, the tablet winner, is Scott H. That's Scott H. So congratulations. Again, we appreciate you taking the time. Have a wonderful weekend and good selling. Take care.